Okay, let's dive right in because there's a real sense of financial urgency in the air this week. If you're following the markets, you've probably heard it.
You definitely have. One name is really dominating the conversation.
Yeah, Peter Schiff, he put out this video basically calling it his final warning on silver.
Right. And it's pretty dramatic stuff. He's essentially saying the chance to buy silver under 50 bucks,
Mhm.
well, it might be closing fast, like maybe even next week, and maybe for good.
That is a huge claim. High stakes for sure.
Absolutely.
Yeah.
So our goal here isn't really to say he's right or he's wrong, but more to, dig into why he's saying it,
Yeah.
what market signals, what economic reasoning is he actually using.
Let's unpack that. Move past the headline and get to the data, the technicals he's pointing to.
Exactly. What's the core logic behind this potential breakout call?
And the urgency feels kind of real when you look at what just happened. His advice last weekend. Well, anyone who acted on it.
They got a fantastic price, didn't they?
Yeah, because come Monday morning, boom, gold gaps up $40. Silver jumps a whole dollar right out of the gate.
That immediate move, it really underscored the call for quick action. Hesitation literally cost money almost instantly.
It really did. So, look, if getting this kind of analysis, especially when things are moving this fast, is valuable to you, now is a really good time to follow the channel. You kind of need this context when momentum picks up like this.
Okay, so let's get into the warning itself. Schiff was pretty direct, wasn't he?
Super direct. His advice was tactical. Don't wait for Monday. He's basically telling people use the weekend, buy gold, buy silver.
Because he thinks these last 2 days of the quarter,
Yeah.
they're going to be big.
That's the idea. Massive moves, specifically in precious metals.
And it's crucial to understand while he's talking about the whole complex, silver is really the star here, isn't it?
Definitely the focus. He's been arguing for ages that silver was way undervalued compared to gold.
And that trade seems to be playing out right now, big time. Silver closed above $46 recently, traded over $46.50.
The numbers really highlight it. Silver up, what was it, 8% on the week?
A full 8%. Compare that to gold, which was up about 2.2%. That's a significant gap.
And year to date, it's even more stark.
Oh, yeah. Silver's up 59% this year. Gold's up 43%. So silver isn't just moving, it's accelerating away. It's leading.
And that speed ties into his price targets, right? He said before that once silver broke $40.
He would make a beeline for $50 very quickly. That was his phrase.
And what's interesting is how quickly he's saying this move from 40 to 50 feels much faster than the grind it took to get from 30 to 40.
Right. That earlier move took months. This feels compressed, more powerful, which suggests, maybe the market structure has changed.
So why is $50 such a magic number then? Is it just a round number?
Well, it's partly psychological, but it's also huge technically. It's basically the all-time high from back in 2011.
Ah, okay. Breaking a multi-decade high.
Exactly. That's like the ultimate confirmation signal in technical analysis. And the belief, or maybe the theory, is that once silver clears $50 convincingly,
It becomes the new floor.
that level flips. It goes from being resistance, this ceiling, to becoming support, the new base. And the idea is we might never look back from there. Prices could really take off.
Okay, so that's the technical picture. But for a move like that to stick, you need more, right? Other parts of the market need to confirm it.
Precisely. And Schiff points to two big confirmations that suggest this isn't just a blip. First, that technical point we just discussed. Silver is leading gold now, decisively.
Right, you see days where gold is maybe up 0.5%, but silver jumps 2%.
And historically, that's critical.
Yeah.
People who doubted the gold rally often pointed to silver lagging behind.
Yeah, that was the argument. Silver wasn't confirming the move.
Exactly. But history shows major sustained gold bull markets almost always have silver leading the way. Silver's like the high beta version, the more aggressive indicator. So seeing silver sprint ahead now, that's the green light that was missing before.
Okay, technical green light. What's the second confirmation?
This one's maybe even bigger. In Schiff's view, it's the institutional side. Wall Street. He says what's happening now is unprecedented in his career, and he started back in '87.
Wow. So what are they doing?
They're actually recommending gold now. Seriously recommending it. We're seeing huge firms, he mentioned Morgan Stanley specifically, telling clients to put a real chunk of their portfolio, maybe up to 20%, into gold.
20%. That's not a fringe allocation anymore.
Not at all. And Schiff sees this as just the start. He calls it a huge wave of money starting to move. Money that used to sit in bonds, fixed income.
Now looking for a new home because of inflation fears.
Exactly. It's preparing to flow into precious metals. potentially for years. Wall Street isn't treating gold like some weird alternative asset now. They're seeing it as necessary portfolio insurance.
Okay, understanding these shifts, the technicals, the big money moving in, it's pretty complex but crucial if you want to grasp if this trend has legs. Just a quick pause here. If breaking down these market mechanics helps you make sense of it all, please do take a second and subscribe to the channel. We're going to keep tracking this, and you won't want to miss the next update.
So we've got silver leading, Wall Street waking up. What about the miners?
Right, the mining stocks. That was the other sort of knock against the bull market for a while, wasn't it? They were lagging behind the metal price.
They were, and that's usually a red flag. But Schiff says that lag is officially over.
So they're participating now.
Oh, more than participating. They are dramatically outperforming the metals themselves, which is exactly what you want to see in a healthy bull market. We're talking about things like the GDX, the Senior Miners Index.
And GDXJ for the juniors.
Yep, and look at the performance. GDX is up 120% year-to-date.
120%.
And GDXJ, the juniors, up 125%.
Wow. That's huge leverage to the gold price itself.
It's massive, like triple the return on gold. That tells you the market believes this rally is real, that mining margins are expanding, and that maybe the risk in these stocks is seen as lower now. So yeah, when silver's beating gold and the miners beating the metal.
It's like, all systems go.
That's the phrase Schiff used, firing on all cylinders.
Okay, so the market internals look strong. Let's connect this back to the big picture, the macro stuff. Why is this rally happening now, and why does he think it will continue?
Right, the foundation for all this is the economic argument. And it really boils down to inflation. Schiff is convinced high inflation isn't temporary, it's structural.
Not going back to 2% anytime soon?
Forget 2%. He thinks even staying at 3% is unlikely. His view is basically high inflation as far as the eye can see.
And why is he so sure about that?
It ties directly back to government policy. Massive deficits, nonstop money printing. He argues this guarantees the dollar keeps losing value.
Not just 2% a year, but potentially much more.
A lot more than 2% per year is
Yeah.
how he put it. Constant devaluation.
Which leads to negative real interest rates.
Exactly. That's the rocket fuel he talks about. Just to be clear for everyone, the real interest rate is what you earn on savings or bonds after you subtract inflation.
So if inflation is higher than the interest rate, you're losing money in real terms.
You're guaranteed to lose purchasing power holding cash or standard bonds. And with the Fed's policies and government spending, he sees negative real rates sticking around. That makes holding non-yielding assets like gold and silver much more attractive. The opportunity cost disappears.
It's amazing when you frame it that way. And then you look at the stock market, and most people think it's doing great, right? S&P up 13–14% this year.
Right. But Schiff calls that a delusion because gold is up 43% in the same period.
So if you measure the stock market not in dollars, but in gold.
In what he calls real money. Yeah. By his calculation, the S&P is actually down over 25% year-to-date when priced in gold.
So people holding stocks might feel richer in dollar terms, but compared to hard assets, they're actually falling behind.
That's his core argument. Wealth measured in fiat is misleading when the fiat itself is being devalued rapidly.
Okay, so if everything's accelerating, what about people thinking, oh, I missed it, I should wait for a pullback? That classic hesitation.
Yeah, he addresses that directly. His warning is basically, if you wait for the perfect dip now, you might miss the whole move, especially with big institutions just starting to get in.
Because the dips aren't as big percentage-wise anymore.
Exactly. He uses the example, gold's near $3,800. A $50 drop feels like a lot, but it's only, what, 1.3%?
Right, not like when gold was $1,000 and $50 was a 5% drop.
Precisely. So trying to time these small wiggles when the major trend is confirmed and accelerating, he thinks it's foolish. The cycle's still early, in his view. Any dip now is just a gift.
And it's not just gold and silver showing the strength, right?
No, the whole complex is moving. Palladium up 44% year-to-date. Platinum up an incredible 74%.
74%.
Yeah, and get this. Platinum gained 12% in just 1 week recently. That single week's return nearly matched the S&P's return for the entire year so far.
Wow. That really puts the momentum in perspective. Okay, let's try to synthesize this. Schiff's final warning. It seems to hang on 3 main pillars.
I think that's a good way to put it. First, you've got the technical confirmation, silver leading gold, miners absolutely surging. That's the market mechanics screaming, go.
Okay, pillar 1, technicals.
Second, institutional confirmation. Wall Street is finally on board, starting to allocate serious capital. That provides the fuel for a sustained move.
Pillar 2, big money.
And third, the macro imperative. The backdrop of unavoidable high inflation, guaranteed dollar devaluation,
Right.
amplified by those negative real interest rates. That's the fundamental reason why this is happening.
Makes sense. Technicals, institutions, and the macroeconomy all pointing the same way.
Right. The cycle isn't just confirmed, it feels like it's actively accelerating right now.
Which brings us to a final thought, something to chew on. Central banks. They've historically been ahead of the curve, right? Seeing the writing on the wall. And what do they buy?
Only gold. They don't typically touch silver or platinum.
Okay, so central banks buy gold. Wall Street is now scrambling to catch up and buy gold. What does that suggest might happen to silver and platinum? Metals central banks ignore. Once that huge wave of institutional money really starts looking around and realizes how relatively undervalued they might be, especially given the performance we just talked about.
Yeah, where does the real leverage potentially lie once the herd fully turns its attention beyond just gold? It's a fascinating question about where the next phase of the rally could be most explosive.
Definitely something to think about. And look, staying on top of these kinds of complex, fast-moving situations requires ongoing analysis. If this breakdown helped you understand the dynamics and the urgency behind this warning, please make sure you subscribe and follow us. We'll keep providing critical thinking on these crucial financial shifts.